So gold is down 27% from its all-time high back earlier this year. And every headline that I'm reading, and that you're probably reading as well, is saying that the bull market is over, central banks are selling, and that you should just sell now because it's over. And here's the strange part. Some of that is actually true. Central banks are selling their gold because there's basically two camps right now. Camp 1 says the gold rally is over. It's been a long time coming. It got way overheated. The Iran war started. And the other camp says gold's on a sale right now. We've seen this happen before in 1974. The average drawdown of most gold bull markets is around 24%, and we're at 27%. Back up the truck now because gold is on sale. And neither is really looking at the thing that matters. When I see all these headlines, no one is really looking at the ledger of who is actually buying and who is selling, how much, and why. So the riddle that I want to answer in this video, kind of for myself, because I'm seeing all these different confusing headlines, is that if the smart money, the central banks, are selling gold and some are buying gold, then why is the price in dollars going down? And when will this pain actually be over? So sure, gold is down 27%, but will it actually go up for the rest of this year? We're going to go into the ledger and try to figure that out. I'm going to give you the names, the tons, the prices they sold, the prices they're buying. So when you see a headline like this, you don't get scared. And at the end, I'm going to show you exactly what I'm doing with my money. So with that said, let's get into it. My name is Ivan Hidalgo. 80% of my entire net worth is in physical gold. I've recently just escaped the West in the past 2.5 years, and I've been living in El Salvador ever since. This is the Golden Bear, where we stack hard money and watch the empire fall. Okay, so let's have a post-mortem talk about this drop. What happened? Because gold spiked up to $5,600 an ounce, and then it's just been falling down for the past 6 months. So there are multiple reasons why gold spiked up to $5,600. There was a lot of fear at that time. There was a whole sell the US dollar narrative, and also the Iran war hasn't started yet. So at that time, people were expecting, okay, we have World War III potentially in the horizon. Also, everyone is selling Treasury bonds. I'm going to do the same thing. And it became very popular to sell America and buy gold. But now the reality has happened. It's been a couple of months of the Iran war. Selling America was a pretty good bet at the time. And now things have cooled off and we're down 27% to around $4,000. Now, here's the thing. That drop was not gold failing. It was monetary. Let me explain, because this is the whole key before you can understand anything else in this video. There's a number that's called the 30-year Treasury yield. Basically, how much the government pays you if you lend in money for 30 years. And right now, that number is above 5%. A few years ago, that was at 2%. So for the first time in a while, a boring government bond actually pays you a pretty good return. And gold doesn't pay you anything. It just sits there looking pretty in your hand. So when bond yields jump up to 5%, a lot of money that want to play it safe have seen this massive historic rise in gold start shifting all those profits back into bonds. On top of that, the dollar got stronger, and since gold is measured in dollars, as the dollar goes up, gold goes down. That's it. That's the whole crash. Nothing broke about gold. The stuff sitting beside it, Treasury bonds, just look a little bit more attractive right now. But this brings me to the most important idea of this entire video. Gold is falling is the wrong sentence, because gold doesn't really go up and it doesn't really go down. Gold is the measuring stick. It's the meter. Everything else is measured in it. An ounce of gold is an ounce of gold. Okay, so now the fun part. The central banks, the ledger, the plumbing behind this. Who's actually buying and who's selling and why? So when you see scary headlines, just understand how they're made. Someone looks at 1 month, sees 2 big countries selling, and decides, we got to write a whole story on this. Central banks are dumping gold. But if you actually want the truth, you need 2 things. You read the net, all the buying minus all the selling, and you understand the why. So let's do both. First, the sellers. Who has been selling? Why have they been selling? And how much have they been selling? Well, mostly it's been 2 countries, Russia and Turkey, and they both have specific reasons. Russia's selling to plug a hole in its budget It's actually a pretty bullish thing if you think about it. A country has bought an insurance, gold, and now that they're in the middle of a war, well, they can't use US treasuries because they got frozen, but they can use gold. So you buy gold for that specific reason. For when shit hits the fan, you're ready. They're down 34 tons this year so far, but they're still sitting on 2,300 tons. So that's the Russia story. And then there's Turkey. And Turkey's the one that you need to pay more attention to because they sold 81 tons just this year. But the headline number is a trap. It sounds like a lot, but when you actually look into it and research it, most of that wasn't really a sale. It was something called a swap. Basically, Turkey borrowed dollars and put up gold as collateral temporarily. That's to defend its currency once the war in Iran is over. That gold comes back. Actually, only 22 tons of Turkey's overall 109 tons of the sale, only 22 tons was a sale. Everything else was a swap. So the scary headline, Turkey sold 81 tons of its gold. In reality, it's more like Turkey pawned some of its gold during a crisis and it's already buying it back. Now, the buyers. And this is what most of the headlines leave out. Poland, just this year, has bought in 64 tons. Their total is around 600. Their central bank just recently set a target for 700 tons. Their reason, straight from the governor's mouth, is national security. And we all know China. They've been buying like crazy, 25 tons just this year. And this is their 20th month in a row buying. Not 20th week, 20th month. Uzbekistan's buying. Gold is about 87% of their entire reserves. Kazakhstan's buying. Singapore is buying. The Czech Republic is now on a 39-month buying spree. A whole cluster of countries that weren't stocking before are buying and doing it very quickly. So let's read the net. March was a net selling month for central banks. April was up 17 tons, so net buying. And now in May, they were up 40 tons. For the first quarter, central banks bought 244 tons of gold. They have been buying the dip. And here's the real tell. Every year, the World Gold Council surveys these central banks and just asks them straight up, what are you guys going to do? Are you going to buy or sell more gold? This year, a record 45% of central banks are planning on adding to their gold reserves. That's up from 29% just 2 years ago. And as a group, they've been buying more than 1,000 tons a year for more than 4 years. Now, as gold investors, sure, it's important to look at the price in dollars, but the real questions are the fundamental thesis. Is the fundamental thesis why we invested in gold over? Just answer these questions. I'll ask you questions. You're going to know the answer to these. Are the government deficits gone? Is the national debt shrinking? Has the interest on that debt calmed down? Or is it still over $1 trillion a year? About $2.8 billion a day. Did central banks stop buying? Did the money printer actually slow down? So those 5 answers are the reasons why I have 80% of my net worth in physical gold. Now, practically speaking, we live on dollars, so the drop does feel scary. Price in dollars, we're still down 27%. But let me put that in perspective, because this has happened before. It's the same setup, honestly. The dollar had just come off gold. There were inflation fears. There was an oil crisis. There was war fears. And over that whole decade, gold went up 2,300%. But here's what people forget. It wasn't a smooth ride up. Take a look at this chart from 1971 to 1980. It was a brutal way up, with an average drawdown of about 24%. The harshest one being in 1974 with a drawdown of 47%. So I'm not promising you a moonshot here. I think all of us that are investing in gold are in it for the very long term. I'm just trying to educate you on this is what a gold bull market feels like. I wasn't around in the 1970s, but I can imagine the people who were buying gold and dollar cost averaging in. They were kind of scared when it dropped in nominal terms. That's a big dip. But the smartest people, if they held on and continued to buy in dollar cost average in and see gold for what it is, a true measure of value, then they didn't get inflated away. So our worst drop so far is 27% versus their 47%. And to me, that's just what a mature market looks like. We're not going to see another 2,300% return. Those days are over. But we're also not going to be dropping another 40% from here. So what do we actually do with all this? Now, I'm going to be the first one to tell you, nobody knows when the bottom is. But me personally, I've been treating it like the bottom ever since we've been bouncing around $4,000. It could drop another 10% from here easily. So I'm not telling you to catch the exact bottom, but I'm just dollar cost averaging in. And when I'm seeing gold on sale, which it is right now, I'm doing it a little bit heavier than I would usually. Because in a year, in dollar terms, I think gold is going to be a lot higher than it is today because of the 5 questions that you answered. But that's my view. It's not advice. It's just my situation. I don't watch the talking heads or Wall Street. Sure, these headlines are popping up all the time when I check my phone, but always keep your eyes on the guys who can control the actual fiat system, the central banks. What are they doing and where are they placing their money? They're the biggest, best informed money in the market. They're not buying ETFs. They're not buying gold mining stocks. I'm not against gold mining stocks. I hold some. But they're buying actual physical gold and they're holding it themselves. An ETF is a promise from a company. A miner is a bet on a company. But physical gold in your hand is a promise to no one. Remember Russia, whose paper reserves got frozen, and now when they need it the most, when they're in actual war, they always have gold. That is true insurance. That is true value. Me personally, I keep it simple: gold, Bitcoin, land, and a bit of stocks, miners. So don't guess the bottom, just keep trading their paper for the real thing, the way the real smart money does it. Stack the gold, pay off the debt, get out of the system, and I'll see you in the next one.